Namaste participants. We welcome you to the 11th virtual CPE meeting on business responsibility and sustainability reporting, which is by Continuing Professional Education Committee and an initiative of Chairman Shri CA Dr. Rajkumar Adukia and Vice Chairman CA Gyanchandra Misra. Here, today we have got renowned faculty who is going to talk about the stated subject. We have CA Aditya Kumar from Bangalore. Before we start with the session, I want you to make him acquainted with the participants over here so that they know who is CA Aditya Kumar from Bangalore. So, CA Aditya Kumar is a partner with RGN Price and Company, Chartered Accountant. He is a commerce graduate from Bangalore University. He is a fellow chartered accountant from ICAI, diploma in information system audit, a certificate in forensic accounting and fraud detection, ICAI. He has certificate in business responsibility and sustainability reporting. And yes, this is what is going to help us out today. Certificate in international financial reporting, international standards of auditing, and robotics in finance. He's an associate member of ACFE, USA, past independent director's exam from IICA, COVID-5 Foundation from APMG International. He's a partner with the said firm since 2017. He specializes in accounting standards and other financial reporting aspects. He has various accomplishments to his credit. He's a speaker in professional forums like Society of Auditors, CA Study Circle, branches of SIRC of ICI, regional training centers of CAG of India, Fiscal Policy Institute of Government of Karnataka, Madras University, other education institutes. He has contributed literature on topics of audit and assurance, financial reporting aspects to journals like Auditor published by Society of Auditors, Internal Audit Today published by Institute of Internal Auditors of India and other blogs. He has co-authored books on artificial intelligence in financial services and contributed to leveraging data analytics in internal audit, conducting in-house training sessions and other knowledge sharing initiatives of the firm and other organizations. He has participated in IASB and ICI initiatives by contributing comments in amending the financial reporting standards. He has taken the initiative to serve his clients on sustainability reporting. So here, he takes it ahead from here. And sir, I welcome you. A very warm greeting to you for enlightening the fraternity with the knowledge that you have so that the fraternity can benefit from it and use it in their practice, in their field, and whatever areas they are there. So sir, on to you from here. Please go ahead.
Good evening, Dr. Salim and C. Aditya. Just before going ahead, one small, information, announcement for the participant. I would like to make here. Due to some unavoidable reasons, Advocate Ballar Singh, who was happened to take the session on how to master consumer law, would not be available for second session. So, as we have requested, we have accepted our request also, sir. So, today's session will be for 2 hours of yours, sir, Aditya. This is the announcement for the participant. So they may raise a question in the chat board and that would be answered at the end of the session or as per calendar itself, sir. Thank you from my side. Welcome, Aditya, to you, sir.
Thank you, Dr. Salim. Thank you, Mr. Ajit, for the introduction. I should also thank the Institute of Chartered Accountants of India for having this program, which gives an introduction to what BRSR is all about and how the world is looking at the financial reporting in a completely different manner. And also thank the Institute for giving me an opportunity to share my thoughts as well as the little experience that we have got in this particular area and how we are approaching the issues that the clients have here too. And before I go on to discuss about the topic on the introduction, etc., yesterday I got a message from Dr. Rajkumar Adukia on WhatsApp on dealing with why somebody needs to be thankful or the gratitude, how important it is. And it struck me that that's the word that I was looking for today's presentation, actually. We as an individual or collectively as a business or as a company, as you may call it, when we are successful, it's not because of our own efforts, but there are a lot of other hands that have made us today. Whether it's a business or an individual, beyond the time and efforts that are put in, it could be your friends, it could be your relatives, it could be unknown hands which would have helped you to achieve what we are today. And that's where the word gratitude comes, that we need to be thankful not only to them, but to all those who indirectly helped us to be successful and for whatever we have achieved. Taking the leaf out of that particular message for the business as well. Any business that is successful, and we have seen some of them who are there for last hundreds of years, they must be doing something absolutely right for them to be relevant in today's world, to be ahead of the curve, and to be acceptable to the stakeholders. So what is that they're doing right for them to be still relevant and they're still existing and they continue to showcase their ability to be in the future as well? In the business, we always thought about making profit, accumulating wealth, generating value. That's all fine. That's what we learned over the period of time in our financial management theory. And these theories have evolved over a period of time, right from time immemorial. But then we are now actually looking at the fourth phase of theory, that what I call it as welfare maximization. So we are looking at a scenario where you have business, but is this business going to be a responsible corporate citizen? And how is this business going to be sustainable in the future? What are the challenges that they're going to have? Because you're not going to get the same kind of resources, the same kind of requirements. Requirements will change, business will change, there is demand, supply. So how should the business evolve itself over a period of time to meet the requirements in the future is something very interesting that we need to understand. Now, in all these theories which has evolved over a period of time, it was always concentrated on the business and what business can do to itself to grow. But we are now moving outside that shell to see what business can do to its people around it, what business can do to environment, to its community, for it to be relevant. That's the topic that we are going to discuss today. Now, where did all this come from? Just to give you a quick background. All the governments, their political leadership, whether India or in the rest of the world, they were always discussing about the issues predominant in every other country. It could be relating to removing poverty. It could be ensuring getting affordable education, healthcare, drinking water facility, good infrastructure. These are all some of the problems that almost every other country has, and there are steps being taken in different manners by the government to see how it can make our lives better. But then it was felt that what is being done was not good enough, and we need to do a little bit more and little bit quicker to ensure that we do these welfare activities at a larger scale, at a better scale. The United Nations also brought about this in their various discussions and the various forums. India was also party for under various discussions. The last we could see was the Paris Agreement, wherein the government said that we are going to have green energy initiatives. So like this, there are a lot of initiatives that various governments are taking to ensure that our lives are much better off. Now, why is this important? Because all this affects business in one way or the other, and all this is impacting our lives in one way or the other. Very simple things like raising global temperatures, unseasonal rains, right? The coastal area is slowly getting into the sea. Sea level waters are increasing. There's large-scale deforestation happening in the name of development. Now we are looking at all this. Yes, it may serve a short-term requirement, but it has large-scale and long-term implications. Now there must be somebody to arrest this large-scale and long-time negative impact. Most of the the participants here would also know about way back in early 2000s or late 90s, you had this Kyoto Protocol where the European Union and others, they thought to bring the carbon credits to a lower level, to bring down the temperature levels by ensuring that they adopt greener technology, etc. But in my view, it was not a great success. Maybe there could be other views as well. But then the world now is awake that there needs to be done something to ensure that our place is more sustainable in terms of living, and in terms of business, it is sustainable in doing that. And that's where the concept of environment, social, and governance comes from, ESG. Now, typically, it's all started with the United Nations bringing in something called as Sustainable Development Goals. So there are 17 goals which the United Nations has brought in. And it said that if the world has to be a better place to live by 2030 or 35, we all collectively need to achieve these goals. These 17 goals start right from ensuring the poverty levels are lowered, getting affordable drinking water, healthcare, marine life, afforestation. A lot of things are covered in that. Now, who is going to execute all this? So that's where the governments said that we will ensure that our corporates look into this and contribute whatever they can towards achieving these goals. Now, obviously, when you ask something to be done, very less it gets done, but when you make it mandatory, make it by law, then it becomes a lot more forceful and people actually tend to go with it. Of course, we love people to do it voluntarily, but then it may not work always. So certain countries, including India, then decided, yes, we are now going to have our own goals aligned to the Sustainable Development Goals and bring in this reporting requirements. Some of the companies across the world have already started it, including some of the very large companies in India have already started reporting on how they are more environmental friendly, how they are more social friendly, how is their governance structure, etc. Now, this gives a lot of opportunity for the government, for the investors and other stakeholders to get a better view of their business. Now, once it is made as a law, as a requirement, then of course you will see that there will be a lot more compliance towards. As far as the current requirements are concerned, MC has also brought in certain regulations. The SEBI has also brought in sort of a BRSR format of reporting to top 1,000 companies, which is mandatory from 22-23 financial year. For 21-22, it is voluntary. If certain companies would like to adopt it, they can very well adopt it now, or they can do it. They will have to do it from 22 and 23. And we have also seen that once it gets adopted by larger companies, it will obviously trickle down to the medium size and smaller businesses as well. We have seen this happening a little bit in our responsibility on CSR. CSR earlier was, in a very nascent stage, it was more like a guideline how to go about it and how to do it. Now it has become a law. Then you have reporting requirements. From this year, the auditor is also required to report on specific aspects in CSR. There are specific reporting requirements on CSR. So like this, even the BRSR will also find a day when it becomes mandatory and there will be specific reporting requirements. Now, The way the BRSR should be looked at is not from the reporting perspective. Reporting happens at the last. But as and when you go through this presentation, you will realize that BRSR gives a very good opportunity for its business to become more relevant. They will find opportunities to reduce their cost. They'll find opportunities as to how they can keep their community happy so that they can do a better service. And of course, for chartered accountants who are in practice, it's again another vertical or another opportunity to serve their clients. Now, what we are going to look at here, both from the industry perspective and from the practice perspective, is what does BRSR is all about, what does the reporting contain, and how are we going to address this? And of course, we have also had questions on certain myths that, okay, it is not applicable to so-and-so company. Is it independent of the financial statement, etc.? We are going to even discuss those aspects as well. Now, with this background of BRSR, we are moving towards the concept of profit. Now, as chartered accounts, we know what is profit, and we have net profit, gross profit, EBITDA. We look at profit from different angles and keep measuring it in different manners. But what profit we are looking at is only in the P&L account, is in the financial aspect. But you also need to look at how is this profit that is getting generated is impacting the planet in terms of its resources and the society at large. These two pieces also needs to be taken care of. One, the society aspects, and one, the environmental aspects. Now, when you look at the environmental aspects, is your business ecologically sensitive? As I said, it's fine, you get resources today for use in your production or manufacture, whatever. But what are you going to do when it is going to dry up one day? We are looking at petroleum reserves now. We don't know how long will it last. Now, what is that we are going to give it to the next generation then? I would rather say inherited certain things from our ancestors, from our forefathers, and we are enjoying it. Now it's our responsibility, give it the baton to the next generation. And when we give it to the next generation, we need to be more responsible towards that, more sensitive towards that. We don't want to be in a situation where the next generation can't even see a tree in the city. We don't want to be in a situation where people don't know what petroleum is all about. Right? So there are certain environmental aspects that we need to look into, and there are certain people-related aspects we are looking into. Because the people, whether you call them employees, workers, or whether they're in the community who have allowed you to set up your factory by giving up their land, or the customers or the vendors, people relationship is very, very important. Sometimes it cannot be replaced. So how do we ensure that we balance our environment, our social, and our governance aspects is all covered under this concept of triple P. Now, we are not saying that which one is higher, which one is lower, which one is superior, or which one is inferior. We need to look at all three of them in an equilateral triangle. We need to see equal importance is given to all these three P's. Now, when it comes to profit, we all know as chartered accountants, the next immediate thing that we also discuss about is what do I invest in to get more profit? That is what we call it as capital. Now, when we are looking at capital, we know about only the financial capital aspect, but the financial capital is just one portion of the entire business. We have certain other things to take care of, looking at the human capital, looking at the natural resources that we are using, looking at the intellectual capital, the social and relationship, and the manufacturing. Now, it is because of all these capital, we are able to balance the planet, the people, and the profit, the economic profit that we are looking at. It is just not enough to invest in business. Investing in business also means investing in knowledge, preserving the knowledge, upgrading it, bringing in the right skill set, having the right intellectual property. And how this experience which has been gathered over a period of time can be reinvested in the business. How are we going to preserve our natural resources? Then when it comes to social and relationship, we are looking at stakeholder engagement, the supply chain sustainability. We are looking at right from the point the raw material is being generated, bringing it to your factory or premises, processing it, disposing it off, etc. And in this entire process, how is the community around you being benefited out of this? So we are looking at these things in a very holistic manner. Similarly, intellectual capital is also important, wherein it all depends on the research and innovation, the value-added products that you bring in. So what we are talking about here is how are we going to manage all these 6 forms of capital, what I call it as value creation around this 6 capital. Now, once we know all this, we now move on to the topic of environment, social, and the governance aspect. Now, the governance structure is also extremely important because that is what would help give the right direction to an entity or to a business to see that they balance the business, the environment, and the social aspects together. Environmental, we are looking at the climate change impact on your business, the carbon footprint, the increasing pollution levels, the depletion of natural resources, and impact on nature. Now, just to give you a small example, especially companies who have assets on the sea or near the seashore, they are finding it that the the times at which the disaster happens is only increasing, or there is increased pollution. So what will happen? You're making lives of others a little bit more difficult to live. So we are trying to look at, is there any environmental impact by your business? We are trying to look at how is your internal practices on health, safety, security, on the living conditions of the people, the working conditions out there, the diversity of people who are working. Are we doing a social justice there? We are looking at that aspect also. And finally, we are also looking the business from how transparent it is, the code of ethics, driving the corporate leadership, etc. So these 3 pillars is what we will be discussing in this presentation. If you have any doubts till now, I'll be happy to take any questions.
So I don't see any questions because the questions if posted will be put in the chat.
Sure.
So we can move ahead. Thank you so much, sir.
Now comes to our part. What is that we are going to do on the ESG reporting in India, and where did it all start from? So as a concept, we had this way back in 2009 when the National Voluntary Guidelines was issued by MCA. But as I said, it was just a voluntary guidelines, and some companies have been taking those guidelines and have been working towards that. 2012, 3 years later, the business reporting, responsibility reporting came up, where you don't see the word sustainability till then. 2012, it's only about business responsibility reporting, which was a concept introduced to certain listed companies. And by 2015, it was extended to top 500 companies. Many companies, of course, the listed companies are reporting on these aspects since then. But then we are going to extend this to top 1,000 companies by 2019. Now, in 2019, what happened? Apart from the NVG, we got the national guidelines on responsible business conduct. Now, what is this NGRBC all about, or National Guidelines on Responsible Business Conduct? NGRBC is very aligned to the 17 goals of the United Nations Sustainable Development Goals. So we have 9 principles which was brought about. 9 principle is nothing but the 17 Sustainable Development Goals which the United Nations has brought about. So what we are going to now do is look at these 9 principles and see how has the corporate been able to work on these 9 core principles, and also see how the reporting requirements take place. So what we are also going to do during the course of this presentation, since we have an hour extra, we will also go through the format of the reporting that the SEBI has given. We would also look into some of the sample reports that the large listed companies have given. I'm sure some of you could be employees of those companies as well, but then for others to understand and for academic interest, we can look into it. Now, once these principles are given to the listed companies, there is also a proposal or thought that even unlisted companies will have to get into it, or the large LLPs may also have to get into it once it becomes mandatory under the corporate laws. So far, it is not applicable for unlisted companies, but nothing wrong if they would like to follow it. That's always good if something needs to be, if something could be done. Now, when we look at the reporting based on ESG parameters, the question comes up is, from where do we start reporting and what framework do we use? Just like you have accounting standards, you have an accounting standards, then you have Ind AS for reporting on certain companies which are listed on stock exchange, meeting certain criteria on the net worth, etc. So they have Ind AS to follow it. So when you look at the balance sheet, you know that this is complied with accounting standard, this is complied with Ind AS or US GAAP or IFRS, whatever. Now, when it comes to reporting aspect, the question came up is, how should the companies report? Where should they report? What should be their benchmark? Now, we already had reporting under the SEBI requirements, under various other laws, including company law. You also have, so if you look at the annual report, you will see management discussion analysis, you will see the director's report, you will see report on corporate governance, then the financial audit. So many reports will be there. This will also be one part of it, or is it going to be a wholesome document, is one question. Now, what needs to be reported was a challenge because the topic itself is very wide. That's when the reporting frameworks evolved. The first one that we are looking at is the Global Reporting Initiative, or GRI, which brings in standards of what needs to be reported. Later on, you had SASB coming up with their own standards and TCFD coming with limited standards on reporting on climate change aspects. Right now, the situation is the IFRS Foundation, or IASB, has also established the International Sustainable Standards Board, and 2 exposure drafts have already been issued for people to go through it and give their comments. ICI has also formed Sustainability Reporting Standards Board, and they will also be issuing certain standards on what needs to be reported and how it needs to be reported. So you have accounting standards, you have Ind AS, you have valuation standards, you have auditing standards, you have forensic standards. Now you are also going to have sustainability reporting standards. And the companies are expected to comply with those sustainable reporting standards. Now, when we talk about this, we are looking at both financial and non-financial parameters. And we are also looking at what actions have been taken by the company. We will be using both qualitative as well as quantitative metrics to measure the performance. And therefore, it is going beyond the tick in the box compliance requirement. It's definitely not tick in the box. I'll be able to better explain this in the subsequent slide. But the key features that we are looking at is, one is transparency, and in the disclosure, how relevant is it for the stakeholders and how authenticate is the information. Now, these are the three key features around which all the ESG reporting happens, and somebody would also be looking for an independent validation of these disclosures. So right now, we may not have a law which would require independent validation of the ESG, at least in India, but day is not too far when there could be a law wherein there has to be an independent professional, or maybe even the statutory auditor would have to report on these ESG disclosures as well, thereby widening the area of work of we as practicing chartered accountants. And there will be additional responsibilities for people sitting on the other side of the table to ensure that these reports are made available at the right time, with the right quality, and how relevant it would be for the organization. Now, what are these 9 principles that we are talking about? The first principle that we are talking about is business should conduct and govern themselves with integrity and in a manner that is ethical, transparent, and accountable. Somewhere you might have dealt with this, especially in the testing of IFC controls, or during the review of your entity level controls. Yes, it is very closely related to that. Now, you will have to now report in the ESG reporting requirements. You will have to demonstrate in your report as to how have you ensured that these aspects of governing with integrity, ethics, transparency, all that has been taken care of. A one-liner statement would not be sufficient. So there is a particular format in which the auditors, in which the management is expected to report on how they have ensured compliance with Principle 1. So there are certain questions that needs to be answered. I will take you through those questions after this particular slide. The second principle we are looking at is businesses should provide goods and services that is sustainable and safe. Now, you will have to analyze your business in whichever industry you are in and see right through your supply chain, is there any way that you can make your business more safe, more sustainable, more environmental friendly, more people friendly? Especially this happens in manufacturing companies, logistics companies, where, or even in a hotel industry for that matter, you are using a lot of items either as raw materials or consumables or finished products, packing material, assets, etc. Is that going to be environmental safe? The question mark that you need to answer. We will also see what are other questions that needs to be answered. So principle 2 is answering how is that my business is going to be more sustainable and more safe. The third that is getting reported is on the employees. Businesses should respect and promote well-being of employees, including those in their value chains. When you say value chain, it means your customers, your business partners, your vendors, your subsidiary companies, your any entity, branches, etc. All of them will be covered in your value chain analysis. So here you need to answer specifically on how is your company done to ensure that your employees are safe, their well-being is taken care of from the point of health, safety, and other aspects. Principle 4 talks about businesses should respect the interest of and responsible to all its stakeholders. Now, who could be your stakeholders? It's not shareholders. Shareholders are also part of them. It could be your customers, the community. Who are all your stakeholders? Whom do you represent? whom does your business actually touch? All these people are stakeholders, and how is their life getting affected because of your business? Principle 5 talks about businesses should respect and promote human rights. Extremely important. Principle 6 talks about business should respect and make efforts to protect and restore the environment. This is actually where the focus these days are, that people are talking about being environmental friendly. Principle 7 talks about businesses, when engaging in public and regulatory policies, should do so in a manner that is responsible and transparent. Are you running an IT company? Yes. What is your stand on, say, for example, data protection guidelines? I'm just giving an example where there is a lot of discussion on and how the law needs to be formed. If you are in an industry like automobile manufacturing, what would be your stand on the government's intention or rather regulation to move towards BS6 stage? If you're in some other industry, what is the stand that you're going to take on a particular regulatory aspect? Or are you somebody like a large company like Google, where you literally have a monopoly on certain things, and is it possible for you to misuse that? These are the things also covered under principle number 7. In the slide, this should be principle 8. I will get it corrected. Principle 8 is businesses should promote inclusive growth and equitable development. One is equal and one is being equitable, quite different. So how is your business going to be fair to everybody? And principle 9 is businesses should engage with and provide value to their consumers in a responsible manner. So if you look at all these 9 principles, it goes back to connect the ESG aspect, or the environmental, social, and governance aspect. And these some of the United Nations goals that were, whether it is on having clean ocean water, drinking water facility, removing poverty, improvising education, right? Having clean energy. These are all 17 goals which are aligned to all the 9 principles of NGRBC. So what we are looking at, 17 SDGs are nothing but 9 NGRBCs. So now I will also take you through the 9 principles of reporting, and together with what is expected out of these reporting requirements. So, business reportable responsibility and sustainability reporting format, which is given by SEBI, has basically 3 sections. Section A is a very general disclosures, very simple disclosure. Section B is specific to a particular businesses, industry. Section C is where the actual 9 principles of NGRBC comes into the play. Now, when you look at these annexures, the first section A is a very simple disclosure on the name of the entity, year of incorporation, your registered office, the corporate address, emails, contact details, and a little bit more on what type of products and services that you would be dealing with, right? And what will be the turnover of your company? Where are all the operations, whether it's in India, outside India? What are the markets served by the entity, right? And we also need to give certain disclosures on the number of employees within an organization, giving the breakup between the gender as well as whether they are permanent or other than permanent. So this is a fundamental information that is being captured in section A, which also talks about the participation of various genders, male, female, especially able people, disabled people, all of them. And focus is here more on what has been the trend of people leaving your organization, the attrition rates, the number of people on the board, and details of holding subsidiary associate companies. So broadly, it's a macro level numbers that you are going to give in section A, which talks about the fundamental details. Then you have certain disclosures coming from the CSR aspects and also on the complaints or the grievances on any of these 9 principles. So typically, if you have received any complaints from the shareholders or from the investor community, any outside public will also have to be disclosed. So here it is more and more about very simple disclosures that any company would have. The challenge would come only in section B and C, wherein here you would have to typically answer every single question and give information in the report. Now, section B is basically talks about management and process level disclosures. So this section is aimed to help business demonstrate their existence of policies and procedures which are in place. Now, for example, if you say, yes, I have a policy wherein I ensure that I give equal, I practice equal remuneration to our employees. Now, that statement will not be enough. You will also have to give a web link of those policies for people to actually read and understand. What is your policy against compliance with certain standards? For example, you are supposed to follow certain standards like Forest Stewardship Council, Fair Trade Membership, ISO. Then you will also have to give these details under section B. And if you have certain specific commitments and goals on the governance, leadership, oversight, then you will also have to give these details in section B. Now, section B, again, I would say is one step below the macro level where certain information is required to be given on the governance aspects. For example, point number 10 here talks about while assessing the performance of the board of directors, right? Performance against above policies and follow-up action. Or how is it relevant to a particular organization? How frequently is this performance evaluation done? Have they done the evaluation internally or got it done externally? So this is where your G part in the ESG world is being taken care of, where people are now able to judge how good is the quality of the governance from the information that is being given out in this Annexure B. Similarly, all policies and procedures that you would have against the 9 principles, you would have to bring it in this columnar format as P1 to P9. Now, what is more important is this particular aspect on section C. Section C is what is going to take some time for you to understand and deliberate. Principle C is again further split into 9 principles, and each principle is again subdivided into 2 parts. One is called as essential indicators, and the second part is called the leadership indicators. Now, essential indicators are a must and they have to be filled in and they have to be given for this year. Leadership indicators are sort of voluntary for this year, but next year, both of them have to be kept ready. Now, let us take one principle by one principle and understand what would be the reporting requirements. Now, when I said principle 1 is business should conduct and govern themselves with integrity and in a manner that is ethical, transparent, and accountable. Now, typically what used to happen in the general audit reports, you would find one statement where it mentioned, yes, these directors are in compliance or the board is in compliance. You will not even see much in that audit report because IFC covers entity level control, but there is no specific mention. So what was missing in these reports were, yes, the board is saying that they are ethical, they are transparent and accountable. But how is it being demonstrated How is it being proved to the outside world that this is how it is trying to do it? Whether they have actually done it is a question, but are they making attempts to do it is very, very important. Now, if you look at the essential indicators, the first one is they are looking at the board of directors and the key managerial person and other employees other than the board. Have they been trained? What is their skill set? Is there any awareness programs on all these aspects? Are they aware about these 9 principles? Are they aware about the ESG aspects? So now the board has to report that the board of directors underwent these training programs. The board of directors had these awareness programs. The KMP had undergone these sessions. You will have to list what is the total number of programs attended, what are the topics that were covered, and the percentage of people who attended those programs. You can imagine the kind of data that you will have to start collating to make this information available. As and when we go through all the 9 principles, you will then realize that it is not restricted to only accounting and finance people, but you need help from HR, you need help from payroll, you need help from operations, you need help from logistics, you may need a support from external consultant as well. So you are looking at the business in a manner that the first principle is, if I'm saying that my leadership is ethical, transparent, and accountable, I will have to prove. I'll have to prove that these are the people who are on my board. These are the training programs I've given them. These are the number of programs that they attended. And if they have been penalized, we'll have to give the details of what was the penalty, under which regulation was that penalty, a brief of that particular case, and has there been any appeal filed in any of the forums. So here we are not looking at the penalty paid by the company. We are also looking at the penalty if any of the directors or the KMPs have also gone paying such amount. We are also looking their conduct as well. So we are looking here the business and how they are conducting the business. So supposedly if they have paid huge amount of penalty or there are cases filed against them, there must be questions on the ethics, integrity, transparency. That's where it leads to. So that's the reason they are asking these things to be answered, whether these fines could be monetary fines where amount is paid, or it could be non-monetary fines where some of them could have been imprisoned or could have faced other punishments as well. So see the kind of reporting that has evolved. Now you're not only looking at the business, but also their leadership and proving that. You also need to now disclose whether the company has an anti-corruption or anti-bribery policy. It is just not sufficient that you just put it on the website, because if you had this policy and if it is in practice, obviously certain details will have to be given. So these policies will now have to be made open to the public for them to look at it. It should be publicly available document. Then you would also see point number 5 is, yes, if these directors are found to be guilty or KMPs, workers have been found to be guilty and their disciplinary action is taken, you now also have to report on the type of action that was taken against each category of employees or directors, KMP, employee, and worker. And if they have any conflict of interest, those details of conflict of interest or any apparent areas, like you would have received whistleblower complaints, you would have received some anonymous complaints of conflict of interest, that also needs to be reported here. And what is the corrective action? Now, these are just the essential indicators. That means this is the basic information that needs to be reported in BRSR. Now, why this format came up, why these standards came up was, if this information was supposed to be given by the companies without any format, I am sure you would agree with me that it would be very difficult for the readers of the annual report to understand and comprehend how the company has complied with. It's good that we have a format because all the information that is required to be reported is in a particular template, and from there on it can be picked up. Look at the leadership requirements. The leadership requirement says, have you conducted awareness programs at your value chain partners level? Have you thought about this? Have you discussed with your business partners? You might be ethical, transparent, having integrity, but what about your business partners? Are you joining hands with somebody who is unethical? These are certain questions that we need to ask. And finally, how does the entity have the process to avoid or manage conflict of interest and members involving members of the board? So if you look at principle 1, it is linked to corporate governance aspects. It is linked to entity level controls. It is linked to your thought process on tone at the top. So it's very important to understand the kind of disclosures that are going to come up in the future. And going back to the slide where I said it is beyond financial metrics, these are the certain things that we need to report. Now, coming to principle 2, businesses should provide goods and services in a manner that is sustainable and safe. So again, there are a couple of questions that you need to answer is, what is the company's investment in research and development? How much of they have invested? This is going back to your 6 capital circle, wherein intellectual capital is answered here. You're talking about how much expenditure is going to be developed, is being spent by the company, wherein it is going to improvise your product and services. And does the company have specific budget or specific procedures in place to source from sustainable portions? For example, take an example where you are manufacturing this water bottle, the one that I have. Now it's made out of plastic. Your plastic bottles going around anywhere. Is that sustainable? Instead of that, why don't you have just a glass bottle of water with a mineral water facility in your office, which you can refill every time? This is certain things which we are looking at, as simple as even a water bottle. Even as simple as something like you're sitting in a room with they use air freshener. Do you know that air freshener will have certain gases which are harmful to the environment? We are looking at even that granular level. Is it possible to replace refresher with something more which is natural, something which is more environmental friendly? So here we are looking at the processes that are in place to ensure that your products, you invest in technology wherein your products can be more sustainable. You will also have to discuss here, especially IT companies, you will also have to discuss here, how are you managing your electronic waste? What do you do with that old printer or the scanner that is broken, or the old laptops? Companies which are in packaging business, for example, if I can use the word Amazon, for example, you get a lot of packages in plastic covers. Is that sustainable? I don't know. I'm just asking questions, right? You go and buy certain items for your home. You get carton boxes. Fine, carton boxes are not harmful. But what about the thermocol that comes along, or the plastic that comes along with? With factories, what about the hazardous waste that is being emitted? So here we are looking at certain practices wherein the companies need to invest so that they can report something positively on these aspects. Then you also have something on extended producer responsibility, EPR requirements, where there's a waste collection plan. And how is this getting worked out? What is the reporting requirements for pollution control board? When it comes to the leadership aspect, here we are looking at what is the kind of product that we are selling, what is its life cycle, and whether it is getting into the situation where you cannot regenerate its waste or where you cannot reuse it. Is all that also needs to be reported along with the details of the description of the risk that you are taking along with this product, along with its supply chain. And if you are if you are in a company where you are disposing of these, you will also have to disclose what is your policy and procedure on disposing of these waste. So these are some of the leadership indicators wherein you also have to give quantitative details on waste that are being recycled or reused or are being safely disposed of, and reclaiming the product as well. So this is on principle number 2. Now you would ask me, how is this related? If you look at, as I said, you are looking at the intellectual capital in principle 1. Principle 2, you are looking at the manufactured capital. You're looking at how is this being invested. There is a question in the chat box. Expenditure/capital/revenue is considered as indirect cost of manufacturing/rendering service and affects profitability. Hence, there is general inclination to avoid it. What are the possible tangible or direct benefits that may accrue to an organization to continuously invest in ESG matters despite potential strain on profitability and cash flow? It's a very good question, sir, on why should I adopt it, first of all? Yes, there will be certain amount of pain in the initial years, but then people have now started realizing that if they are more environmental friendly, if they are more socially friendly, if they are building products which are more acceptable, their demand for that product is increasing, and obviously your economies of scale will take care of it, and definitely the margins will also improve. Second, your brand image will also improve. We have seen certain mutual funds being launched typically where they invest in only companies which are in compliance with ESG. So I will also give you certain examples as to how different financial products have come out of this ESG concept. So one question that I can quickly answer to you is, when you look at these type of concepts, you are looking at one, at the profitability, of course, and the brand image and the quality of governance that you are going to project to the investors. The third is businesses should respect and promote well-being of its employees. Now, how was this being reported? Nobody would know. Of course, there were certain reports on mentioning about we take care of employees, you have insurance, you have healthcare facilities. But now you are going to specifically report as to how many employees or percentage of your employees get health insurance, accident insurance, maternal benefits, paternity benefits, and daycare facilities. All this will now get into the report, and the companies will have to report on this for both permanent and non-permanent employees. You will also have to report on the workers. Again, when you talk about permanent, other than permanent workers, they are even talking about contract laborers. How have you ensured that they are also covered under insurance? What about their retirement benefits in terms of PF, gratuity, ESI, etc.? And more importantly, how have you ensured that your premises or your building or offices are accessible to differently abled people? Because this is, again, we are talking about being neutral to genders and giving equal opportunities to all. So if you are typically stationed in a building on, say, 4th or the 5th floor or beyond that, how are you ensuring people can come up to that office? Do you have an escalator? Do you have a lift? In fact, in one of the assessments that we did, we realized that, yes, there's a lift, but the lift doesn't have numbers or something description written in Braille. So how would people having challenges in vision understand it? So we are looking at these kind of things also in reporting. How do you ensure equal opportunity is given to people with the disabilities also? And you are also going to disclose how much people went on leave, especially on long leaves, parental leaves, etc., and they have come back. It is there in certain organizations, unfortunately, where they say that, okay, you're getting married, you're having a family, right? You're building all this. But then, since you will not be available, say, for the next 3 months or 4 months, they may discontinue their employment, which is incorrect. Now we are looking at those things as well as to, yes, having a family, having all these leaves is building your society, building people relationship. So these are certain things that you will also have to disclose, including if you have received any complaints from the employees and the workers, how is this being addressed, etc. So these are a lot of disclosures that are going into it, including disclosures on how much of efforts have been there on career development reviews. It's just not enough to give promotion to an employee. Have you actually done the homework of reviewing their work? Are you satisfied with it? Is there something that the employee wants to give as a feedback? How is this constructive discussion happening? All these aspects also needs to be considered, and again reporting on health and safety requirements. And if on health and safety, many organizations will already have a track record of number of accidents or incidents, but now this will also needs to be reported. Again, cases on POSH will also be covered. Now, these are certain essential indicators. I'm not getting into all of them with the paucity of time, but when you look at the leadership quality, now they're coming up with questions as to, does the entity ensure insurance or compensatory package in the event of death of employees? Now, your statutory requirements will also come into play here. Then, have you done the assessment of your value chain partners on what is their health and safety practices, their working conditions, etc.? So, going back to the presentation, which I will again come back to these 9 principles, just to give you 1 second. So, just to go back to our presentation, just the 3 leadership, the 3 principles that I took you through, you will see that it is beyond the financial aspect. It's beyond the numbers. You are also giving a lot of qualitative information. But now when you look at the annual report, you will see financial statements, you will see director's report, you will see CSR, you will see corporate governance. How should anybody make out all this together? It will be confusing. That's the reason we bring in this concept of integrated reporting. So integrated reporting brings in together all these reports by cross-linking or cross-referencing, or where possible, putting information in such a structured, organized manner that it meets the requirements of the law on financial reporting, on the corporate governance, on the sustainability reporting, and any other reporting that the company needs. So it puts together all of them together. That is what we call it as integrated reporting, which is a framework that applies principles and concepts which focuses on giving information in a more cohesive manner, in a more understandable manner, and in a manner that brings value to the readers of the financial statements or the readers of the annual report. Now, this whole concept of BRSR, which we also discussed, is impacting the business. Now, how it is impacting business, I would have to go back to my PDF to cover the remaining aspects on BRSR given by the format given by SEBI. Principle 4 talks about businesses should respect the interest of and be responsive to all its stakeholders. Now, when you identify that this is the stakeholder, how do you communicate with them? Or do you use email? Do you use bulletin? Do you use advertisement? Do you use SMS? Do you use website? People want to know that if they have to communicate, how they should communicate. What is the form in which they need to communicate? And you also now have to report what is the consultation that the stakeholders and the board had. And what is the leadership doing about all this? The principle 4 talks about the governance aspect. Principle 5 talks about the human rights. Now, what is the training that you are given to people on human rights, especially to the HR and the recruiters? Are you compliant with the minimum wages that are being paid to employees? Those details also needs to be furnished. What is the remuneration that is being paid to the directors, to the key managerial person? You will also see that some of this information is already available in the annual report. So in those cases, as I said, your integrated reporting will help, wherein you don't have to report the same information in two places, but put it in one place, right? And the grievance redressal cell of employees against POSH or child labor or forced labor, etc. If you have any business agreements wherein you clearly mention that these are certain things which has zero tolerance, that also needs to be disclosed. And if there are any complaints, you need to report. Same with leadership indicators, wherein you will also have to give more details on how your company is promoting human rights, how your company is promoting differently abled visitors under the Rights of Persons with Disabilities Act. The sixth principle talks about business should respect and make efforts to protect and restore the environment. For me, this is actually one of the favorite principles, because I see as professionals, we will get to interact with professionals other than chartered accountants, possibly with environmentalists and others, scientists, to help the company to report on these aspects. Here, they are looking, the basic information that they are looking at is your electricity consumption, your fuel consumption, with ratio to your turnover, right? Then what are the performance achievement trade scheme that the government of India has? How is that you're going benefited out of it? Your consumption of water, this is extremely important, especially in companies which are in cities where the water scarcity is there. You can't be using drinking water to run your factory. So are you looking at rainwater harvesting? Are you looking at recycling the water? Are you looking at desalination of seawater and using it? So now you will have to find information as to what is the source of your water. You won't even have thought about it, because we just go to the tap, drink the water, or use it for a factory. Now you'll have to find out, where did this water come from? Is it from a borewell? Is it from a river? Is it from the sea? Is it from the rainwater? You will also have to measure actually what is the kiloliters of water that is being used. You see the kind of information that people are expecting to report. And as I said in the beginning, this cannot be done by accounts department alone or finance. You definitely need to join hands with operations, administration, HR, whatever name you can call them under different designations. You need all of them. Here, you are also actually measuring what is the kind of greenhouse gases or emissions that you are looking at. What are the different pollutants? That's why I said, of all the 9 principles, I find principle number 6 extremely challenging, extremely difficult, and you need to do a lot of homework to find out. We don't even know how many factories emit nitrogen or sulfur oxide or whatever it is. So you need to get those information as well by the company and report it. Not only report that, you also need to report based on different categories, and what steps have you taken to ensure that you curtail these greenhouse gases. The principle 6 is very, very important for almost all the companies, right? Then if you are in an ecological sensitive area like a wetland or a forest or a wildlife sanctuary, be more careful. You need to again report on how you have ensured that you have not disturbed the biodiversity, and compliance with the Water Pollution and Air Pollution Acts. Now, all this is basic information. The leadership indicator requires, split this information between renewable and non-renewable, and tell me how you are going to ensure that the natural resources that are going to be used responsibly. What is your plan of action? That is what is going to be reported here. I'll just take a 2-minute break. If somebody has any questions, you can look at it. For now, there are no questions apart from the one that was already put in the chat box. Dr. Salim, I hope I'm going in the right speed.
Exactly, sir. Not only in the right speed, with the right knowledge.
As and when we do BRSR, anything that we touch and see, we start looking at that from BRSR angle.
Exactly. You're actually dissecting it and going to the roots, which is really required.
So when the client gave me water bottle, I told them this needs to be reported under BRSR. What do you do with this plastic?
Right, true.
You say you will throw this plastic, throw it where? You can't throw it irresponsibly.
True. It has to be disposed in a regulated manner. True.
Regulated, but where do we have that infrastructure where somebody can collect all the mineral water bottles?
Right.
So typically, what it either ends up in our drainage, blocking the whole system, or it ends up in our water bodies. That's where it ends up.
Exactly. Very nice, sir. Very nicely you have done it.
In fact, when I was traveling to Delhi, I was telling them, why don't we use the video conferencing all the more? Because when I have to travel, it's not only the money that is getting cost, the carbon footprint that I leave.
True.
Right from the taxi that I take from my home to the airport, the flight that I board, the hotel accommodation that I use, the electricity consumption. Of course, on the other hand, you may also argue that because of this, the driver got his job, the airline got its business, the hotel got its business. So there are always two sides of a coin.
True. Very true.
But I'm also seeing now how even the hotels, for example, are making more and more decisions. For example, even the small decision, instead of keeping a bar of soap in a plastic cover, they're putting it in a bottle so that the plastic cover can be saved.
In fact, most of the hotels display it, especially in the washrooms, that the number of, the gallons of water used per flush in a day and how it goes, so how you can save on that, encouraging the use of tissues rather than water, and, keeping the air conditioners at standard temperature of 24, so that the electricity is, used in a very subtle way, organized way.
And you have a lot of technologies that has come. The moment you close the door, the electricity and the power goes off, so that you don't have to remember that the switch is on.
In fact, even the television displays that you're watching it since 4 hours or 2 hours, depending upon what is programmed with it. So you realize there's an alarm system also in the smart televisions, which also tells you that now you should switch off. Maybe because of the health hazards or because of the carbon footprints, but yes, there's a lot of add-ons to the technology which talks about the topic that you have covered today, sir, till now.
So going to the last two principles on businesses. Now, this is where business, when engaging in public, right? Now, what is their stand on certain aspects? I'm not talking about the political aspects, but I'm talking about certain regulations which might affect the industry. How is their stand being taken? And are they members to any of the industries associations like CII or ASSOCHAM or such kind of trade unions? And have they proposed any regulatory changes? What corrective action has been taken, etc.? That's a simple discussion. Principle 8 is on businesses should promote inclusive growth and equitable development. Here, where we are talking about is social impact assessment. Just like how we were doing for CSR, where impact assessment is done, here also you need to conduct special impact assessments to be undertaken by the entities under any other specific law, or you can do it voluntarily as well, and come out with what has been your contribution. For example, on the projects, or for example, rehabilitation, resettlement, you need to give those details. Or you were only disclosing in trade payables in your balance sheet on MSME dues and non-MSME dues. You now also have to give here the percentage of material that you have procured directly from MSME or small producers and those from the neighboring states. These are additional disclosures that are also expected to be given along with the details of the CSR project that you have undertaken. Principle 9 last is on businesses should engage with and provide value to their consumers in a responsible manner. So that is where we were discussing just now on what are the environmental and social parameters for that product. What is the safe and responsible usage policy? If you would see, some of these packages would also mention how do you have to dispose it of? What is your recycling policy? If you're receiving consumer complaints, you will have to put the information into data privacy, advertising issues, cyber security issues, etc. For example, you would have seen this Fair and Lovely cream. Now they have changed the name to Glow and Lovely. They removed the word fair because they said, why should you promote fairness? People with other colors would feel offended. That was the kind of argument, and I find it, yes, it's just a facial cream. So now they made it glow and cream. That's how the advertising thing comes up. Look at the data privacy. Now you go to your, your mall. They say there's a lucky dip. You give your mobile number. We will call up and tell you whether you are lucky or not. They take your mobile number. How sure are you that nobody is taking that mobile number and trying to seek information from various things? We happily give out our name and addresses everywhere. How sure are you that the company is maintaining data security on our IDs, on our names? Like this, you also have to give certain details on essential trade practices, restrictive trade practices. Are there any unfair trade practices? If you are in a vehicle industry, your vehicle catches fire, then you recall all those vehicles. You have to give those details on what is your voluntary recalls. Nestle, for example, is the classic example where Maggie had to be recalled because there were certain issues on their quality, etc. But then here they are now looking at how is your product responsible? How are you ensuring that it is safe to be used? And you also have to give certain leadership indicators on how are you educating your customers? How are you ensuring controls are in place to ensure that the quality of product or the service that you deliver is actually meeting the standards, etc. So these are some of the, I would say, very quick review of the 9 principles and how it is affecting your reporting requirements. But if you look at how it is impacting the business, there are certain things which I would like to discuss. One, there are now valuations which is done based on ESG. If you look at certain loans that have been given by the banks, Union Bank of India is one among them, where I'd seen very recently that your loan product is designed in such a manner that the rate of interest is linked to the condition meeting the ESG objectives. So the better you meet these objectives, the better is your reporting, your finance cost comes down. This is a very innovative product where your financing is linked to you meeting the ESG goals. The board's performance is also now being assessed based on achieving ESG goals. The remuneration is now being benchmarked when these ESG goals are actually achieved. I have a question in the chat box. BRSR forms part of annual report, financial statement report of an entity. Can separate booklets be attached since reporting on 9 principles can be voluminous? what is the auditor's responsibility on verification and certification of contents of VRS? Thanks for the question, sir. Yes, to answer your question, yes, you can give it as not as a booklet, but as an information in the web page. Because the moment you print a book, you are cutting trees. So there is no point in giving ESG report in a printed booklet. Otherwise, you will have to use recyclable paper. And if you look at some of the companies like Microsoft, when you ask for annual report, they give the report in such a thin paper with a note at the last page saying that this paper is sourced from so and so place and is recyclable and is not harmful to the environment. If that is acceptable, yes. But these days, since everything is in electronic form, you have to give it in electronic form. In fact, the basic premise of integrated reporting is it will be in electronic form so that all that information is available in one place. I will also take you through one of the integrated report if time permits now. Now, coming the question on auditor's responsibility, there is some responsibility, but I will discuss it. I have discussed this in the subsequent slides. Your ESR, BRSR is also now impacting your corporate branding. The way companies are being looked upon is how green are they? That's the new way of looking at things. And of course, how have they served their community, etc. I've finished this applicability structure. Now, if you look at some of the themes, when you look at the mutual fund industry, typically, the mutual fund industry was investing in equity. Within equity, they said power industry, infrastructure, healthcare. Then they said the upcoming industry. Lot of themes came up. Now, one of the themes that is prevalent now is ESG theme. So, mutual funds are investing in those companies which are in compliance with ESG requirements, which are meeting SDG guidelines, which are ensuring that their business is more sustainable. So they believe, their research at least believes or make them believe that this business is going to be more profitable in the long run, or will have a better capital appreciation, or will fetch better value in the future. And therefore, investing in these ESG theme stocks is better, is what is the thought process. And in India, ESG assets went up by almost 4.7 times as per the business standard. And right now it's close to about 12,000 or 13,000 crores of money. That's a good amount of asset under management, where the focus is only investing in those companies which ensure meeting the ESG guidelines. Now, exploring the corporate financial performance, this is again one report which I got from SP Global, where they are looking at ESG as to measure the performance of a company. Apart from its productivity, they are also looking at how is it reducing the cost, what are the revenue opportunities, what is its contribution to the society. So they are bringing in new benchmarks to assess the performance of the company. So this is again something which is new, which we need to understand. This is something which would excite many of you when it comes to valuation. We now also have the concept of ESG adjusted valuation. So you used to look at the P&L account, you would take the projected cash flows, you had those discounting things done. All that is fine to get the value of a company. That was the traditional way in which the business valuation was done based on market, industry forces. But it looked only from the financial point of view. Now we are looking at it in a completely different angle, where we are going to adjust the cash flows. We are adjusting the profits to possible impact of non-compliance with ESG. So if you look at the small example that I've got from one of the consulting firms, just as an example, they're looking at operational revenue and they're adjusting certain amounts for possible mismanagement or for possible penal things that can arise because of non-compliance with ESG. Therefore, their adjusted cash flow will also decrease. Therefore, they are factoring in the concept of ESG within the valuation also, therefore, your valuation of business will be looked at completely different in the ESG era. That's the reason even the mutual funds, when I gave in an earlier example, they are looking at companies who are good in meeting these ESG requirements. I gave an example of a bank giving loan. If you meet certain ESG goals, your interest rate reduces. So now there are different financial products and financial instruments that are coming up which require your compliance with ESG. So the traditional way of looking at things, looking at the governance point of view, looking at the valuation has now undergone a sea change where you will also put in a flavor of ESG and then see whether this business is riskier or not risky. This is another way to look at certain things. Now coming to certain myth busters. Dr. Salim, I hope I'll be finishing it by 5:45 or so, or a little bit early.
Okay.
5 minutes ऊपर नीचे होगा.
ठीक है sir.
So some of the myths that we had seen is, okay, BRSR is only for top 1,000 companies and I really don't have to worry. I'm a small and a medium-sized company. Well, that's not the case. If you look at the principles, they talk about the listed companies also ensuring that their value chain partners are also ESG friendly, are also compliant with ESG requirements. So if you are a vendor or if you are a business partner or a customer, whatever relationship you have with a listed company, it is quite possible that the company may ask you, are you ESG friendly? Because they have to be ESG friendly, they have to report how ESG friendly they are. They will have to report in principle 3, 5, and 6 on these aspects. Obviously, they will ask information from you. And when the information is secured, you have to give it something which is transparent, which is authentic. Therefore, it is my view that BRSR is not only applicable only to top 1,000 companies, that is for reporting aspects. But all other companies should welcome this move, should grasp it, adopt it, make their business more responsible and sustainable, having seen its positive effects. Reporting is one way, adopting the practice, a good practice is another thing. Nothing stops from adopting a good governance, good practice. So myth number 1, that it is applicable to top 1,000 companies is only for the purpose of reporting. And that too, for this year, it's only voluntary. Next year, it is mandatory. So anything that becomes voluntary to mandatory, be sure that it is going to be mandatory for other companies going down the future as well. So that's myth number 1. Myth number 2 is, this is fine, another part of the annual report, it doesn't affect my financial statement. It does affect your financial statements in a big time. Most of the information that you source, for example, when you say business should provide goods and services in a sustainable and safe manner, you will report on R&D expenditure. If I'm looking at this principle too, I will look at your P&L account schedule of other expenses to see how much of money has been spent in research expenses. I would look upon your intangible assets to see, is there any development expenditure that is getting capitalized? Or I would see IAUD, intangible assets under development, to see any development expenditure. Or possibly I would like to look at your capital work in progress to see, is there any investment in your capital work in progress, indicating that you're doing something wherein it is going to help your business be more sustainable. Business should promote well-being's required disclosure or insurance benefits. I would straight away look at your P&L to see what is the insurance cost that you have incurred, your staff welfare cost, your employee benefits itself will tell me that what are the expenditure that is being incurred. So there is a link between the contents in the BRSR and the financial statements, and both have to be read together. Please don't make the mistake of drafting CS or BRSR separately, thinking, yes, it's a tick in the box, chalo, let's just fill it up. No, that has its implications on the financial statement. Financial statements has its implications on this. For example, if I look at BRSR and you have made a comment that the company is now, say for example, a comment that they're going to have a facility to take care of waste management. It's a capital commitment. I would like to see whether that is disclosed somewhere in the financials. I would like to see what is your budgetary outlay in other part of the annual report to see do you have enough funds to support that practice. So this information needs to be integrated and read together. I can also look at your fixed asset schedule or PPE schedule, what they now call it, and your accounting policy says that this plant and machinery, for example, I was advising a company of a logistics company, and they had a fleet of 350 to 400 lorries. Well, it's all depreciated. So I was asking them that, okay, you have these lorries. When the government brings in the Bharat 6, what are you going to do with these lorries? Obviously, you cannot dispose of all of them together at one go. And even if you have to buy and replace that, are you going to lease it? Are you going to buy it? Where is the money coming from? So what I'm trying to say is certain remarks that you make in the BRSR will also have its implications on financial statements, will have its implications on management decisions, will require the board to wake up and actually say that, hey, this is the decision that I'm going to make. Is it possible to achieve it? Because this information will be in public domain and people will definitely ask you. A simple statement in accounting policy, for example, if you say that plant and machinery life is say 5 years, right? And if there has been a heavy investment in the last 4 or 5 years, I would love to see how is that plant and machinery being replaced. Otherwise, that plant and machinery cannot be used. Technically, you may still use it, but technically it may not serve the purpose. So read the BRSR together with the financial statements in a holistic manner, in a comprehensive, in a homogeneous manner. This is one of the questions that was asked. BRSR is not subject to audit, or auditors need not look at BRSR. These days, auditors are required to look at everything. There is nothing called as auditors should not see or need not see. Right now, there is no specific audit report on BRSR. Having said that, there are certain companies who have gone ahead and given that as well as an assurance to the readers. But this is again my personal view. If you look at SS 720, it requires the auditors to read on other information. Now, where is this other information? It will be normally part of the annual report. If that other information contains anything related to financial statements which I have audited, I am bound to read that and see whether anything needs to be done as per SA 720. Should I tell the management that there are certain corrections required, or should I put it in my report saying that there's something else mentioned, whereas this is what is given in the financial statement? So this is my personal view that this will be forming part of other information, and the auditors will definitely have to look at it. Now, are they going to give a separate report? I leave that question to be answered by the regulators as and when they come up with another audit report for the sustainability reporting requirements. Will this have any impact on the role of the directors or the corporate governance? All that way, yes. Whether it's principle 1 or principle 4, where you have to demonstrate that you have been transparent, accountable, etc., you will also have to give these details. So you may say in corporate governance report that yes, all this has been complied, but when it goes back to BRSR report, if you report the other way around, the reader would think either the corporate governance report is wrong or BRSR is wrong, one of them. So there is a link between all these reporting aspects. Will it affect my valuation? Yes, as I gave an example that we are now looking at ESG adjusted valuation. See, if you look at holistically, BRSR actually gives an opportunity for your businesses to re-engineer your business, to relook at your business, to look at your processes and see how can I make it better? How can I bring in sustainable growth? If you're for example, if you want to go for a building, which is nicely done with all the glasses, with good air conditioning, look at the possibility of having a natural light or natural ventilation. It's going to substantially bring down your capital cost It's going to bring down your cost of running the company or maintaining the the asset. Even engineers are looking at these things, wherein when they design the buildings, they are now designing the buildings in such a manner that it is environmental friendly. Even I see it is LEED 5, and a lot of ratings are given. So based on those ratings, even the price of the buildings will also depend. So that is just one example. Your products, your services will also needs to be considered when you are doing this ESG. So that's the broad presentation that I had. But it's time to make your entity ESG ready, to make your practice actually ESG ready. Explore opportunities to make a business sustainable, having a positive impact on profit, people, and planet, which would help businesses to build their brand, build their reputation, and bring in good governance. And most importantly is, we are going to give something to the next generation which they are going to cherish. That is our responsibility. Now, as a coming from the practicing community, I would look at this a wonderful opportunity for practicing CAs to get into this and see how they can advise their client. And the certification course by ICI is quite good, and it's an online course, and I found it extremely useful. So I would suggest members who are interested in taking it up, please take it up. It's a good opportunity, and it is not like one-time opportunity, a seasonal opportunity that this time we had ESG as a practice. It was a bumper crop. No, this is going to be a recurring in nature, because business evolves over a period of time, and wherever there are businesses, wherever there are business decisions, chartered accountants play a very large role in it. So this is the presentation that I had. So with your permission, if there are any questions, I can take the questions. There's one question in the chat box. It said ESG adjusted financial statement. Can you explain ESG revenue? So again, going back to the presentation for better understanding. So what we are here looking at is, we are trying to look at the P&L account and then looking at it from the point of view of ESG. If I add ESG risk, what is going to be the impact on the profitability? For example, in this case, they have given, what if there is a social backlash associated with bad reputation or bad treatment of employees, or your products are not good, are not safe? Would you still consider this will be the revenue? Obviously not. So you will going to discount it. So this is also one of the risk factors, I would say, that is being considered whenever you evaluate the business.
So we'll wait for a moment, because I expect few questions to come down, which usually
yes.
come.
I'm just looking at some of the reports that we can.
Yeah, exactly. So we have an idea on it, right?
Yeah. So this is the BRSR report. Of course, some of you may be associated with these entities. These files are being used only for the purpose of academics and nothing else. I'm not commenting anything on this. So this is from HDFC, and now this is the typical format in which they have reported, where you have section A and B and C, and the principles, all the 9 principles they have given very clearly. So this is section A, very simple disclosure on basics of their company, the product and the services that they are rendering, right? Their locations, the number of states in which they are involved, number of countries in which they are involved. When it comes to HDFC, since it's a financial institution, they don't have a particular product or a service. They have taken housing loan, for example, as housing loan approvals to customers are based on income slabs. So this is where they have given disclosure on economically weaker section, how much they have given the loan. For the lower income group, how much is the percentage of loan given. So they have given as to how much of their loan portfolio is diversified against a different strata of people. Then they have given disclosure on the number of employees and how many employees have got the insurance, etc. Right? Turnover rate, then the list of holding and subsidiary companies. More interesting would be looking at the principles 1 to 9 as to how they have reported. That is where you would look into. For example, here if you see, they've given for the first principle, during the year, the board of directors and KMPs of the corporation spent approximately 30 hours on various familiarization programs comprising matters relating to array of issues, including business, regulation, economy, ESG parameters, etc. Then for other than board employees, they had trading on prohibition of insider trading, sexual harassment in workplace, information and cyber security awareness, code of conduct, know your customer guidelines, etc. And total training days per employee was 10.47. Any penalties or fines that they have paid, they have given those details as well. They have given the link to anti-bribery policy of their company. So this is one report, I would say, which is clean and just sticking to the format. Again, these are all available on the website of the companies. I can take you through another sustainability reporting, but this is of IOC, Indian Oil Corporation. But this is not in that SEBI format, but they have given a lot of information. If you look at it, they have given almost 148 pages information on the reporting requirements. Indian Oil, the energy of India, the vision and its values, their businesses, the various brands that they operate, integrated value chain, right? And they have also given how they meet the SDG. I will just climate related risk. This is how they have disclosed. This is what I was saying, supporting the SDGs. So all the 17 goals they have put together, and against each goal they have mentioned. For example, just to take an example, sustainable goal number 13, they have mapped it to 13. In order to limit global warming to 1.5 degrees, greenhouse gas emissions must fall by 7.6% each year from 2020. Taking cognizance of this, companies are already working towards reducing their emissions and becoming net zero. So what has Indian Oil done? Indian Oil is implementing projects on energy efficiency, renewable energy, process fuel improvements, and technology upgradation to mitigate emission emanating from its operation. The company is reducing emissions from the use of its products by incorporating biofuels, hydrogen-based fuels, and natural gas in its portfolio. Similarly, goal number 15, life on land. They've given biodiversity is declining and there's an increased carbon emission. What are you doing to protect it? For conservation of flora and fauna, IOC has developed green belt or eco parks at its operating locations. In an effort to restore our ecosystem, it has also planted more than 24 lakh trees. So this particular report, I'm not saying this is as per SEBI format, but it goes beyond that. And as I said, it's about 148 pages for somebody to actually read.
So there are two things I want to know.
Sure, sir.
Is there a mechanism to track these reports? Like, this has happened in past, and by the means of reports, it has come down. So how do we know that this is being implemented and perennially being followed?
So that's the area where globally now we are moving towards validating these reports.
Exactly, right.
So now, as of now, in India, we don't have a regulation, to the best of my knowledge, where somebody has to give an audit report on this. But if you look at some of the companies, if I'm not wrong, it is either L&T or other companies, large companies where they are there in other parts of the globe, where it is required to give an auditor's report on this as well. So they are coming up with audit reports saying that the auditor has actually, or the professional who has reviewed it, he has to audit all these parameters and give an audit report. And from there on, you will be able to track whether there is any non-compliances.
So we have got chairman, sir, over here, see Dr. Rajkumar Adukia, chairman, CP committee. And we are blessed that he's come down here to have a word with us. I'll just give a short profile about him so that the viewers know. See, Dr. Rajkumar S. Adukia is a BCom honors, FCA, FCS, FCMA, law graduate, MBA, MCom. He has diploma in IFRS UK, DLL and LW, DIPR, diploma in criminology, PhD in IP from Insolvency and Bankruptcy Board of India. He has also done a course with the United Nations Office on Drugs and Crime, Anti-Corruption Prevention of Corruption. He is serving ICAI in various capacities since 1998. Presently, he is serving the ICAI as Central Council member and also chairman of CP Committee, CPEC, CECL and EA, and CDS director of ICAI. CA Dr. Adukia left no stone unturned during his career span, expanding to more than 37 years. He is a pioneer of many areas of practice which were never thought before by professionals. He served as president of GST Research Foundation. He is the chairman of Association of Indian Investors and vice president of All India Insolvency Professionals. He has mentored 1,000 professionals for passing the insolvency exam and valuation exams. He has authored more than 300 books on a wide variety of topics, ranging from those dealing with trade, taxation, finance, real estate, the insolvency and bankruptcy code, IPR, banking laws, emerging technologies like artificial intelligence, the blockchains, to topics relating to personal and professional growth. He is a winner of National Book Honor Awards 2018. CA Dr. Adukia is very passionate about learning new things and believes self-improvement is a permanent process. See, Dr. Adukia has given solutions of growth to everyone. So I welcome you and ask you to say a few words.
Thank you, Dr. Salim, and thank you, Aditya ji, and the team of ICAI officers. I see Sri Ajit Nath Tiwari, Krishnakant, Madam Reena. Friends, you must be listening Aditya for some time. He has covered A to Z, such a wonderful coverage of the topic, starting with triple C and triple P, people, planet and profit, covering ESG, which is a new development, environment, society and governance. In fact, there may be many areas which can flow from this topic. If we make our mind broad, rather than reporting, we can work on CSR, where, section 135, 7th schedule. In fact, he has covered SDG, which are 17 SDG, and our 7th schedule covers all of them. And besides this, the CSR or sustainability, this is carried out by NPO, non-profit organizations. And under Section 135, the rules, it is done by the charitable trust, it is done by Section 8 company, it is done by a charitable society. We have a cooperative society, which is a profitable organization. And we have a society under Society Registration Act 1816. So it's a wonderful topic. It's a global topic. The whole world works on sustainability. In fact, CA Aditya is also covered, integrated reporting, which is again a requirement. In fact, there is a global reporting initiative, GRI. One will start working on carbon credit, climate change mitigation. So in the climate change mitigation, we have the carbon emission right, CER, we call it carbon credit. So 1000 kg, so one carbon credit. So there are so many areas which one can work on in this topic, and across the globe, this topic and this consultancy, there is something called social audit, which also comes out of this. And over and above this, the management practice, in which area, suppose a company has to spend 10 crore on CSR. So what is the area? Is it education? Is it health? Is it other area in the where the society are to be benefited? I would like you to ask, and he's available later on also. So maybe, we have a, Sri Ajit ji is there. We have a Telegram group. We have a national study circle on sustainability. There is another committee which is doing a certificate course on sustainability. So CA Dr. Sanjeev Singhal is chairing that committee, and there are a lot of initiatives they have taken. So my request to every viewer, I am told that about 1,169 members are viewing this, Aditya, and 1,420 have registered for this webinar. In fact, we had a second session where Advocate Balraj Singh was to take on how to master mediation and ADR. He is a secretary of NCDRC, and some important meeting came. So I requested, so everything is an opportunity. Everything is, so whatever happens. So by God's design, earlier Aditya was asking 2 hour session. I said we will crunch it in 1 hour. And we saw that God gave you 2 hours. And the benefit has gone to, I would like Mr. Jay to see whether there are any queries posted in the chat box. I want each of the viewer, 1,169, to be speaker, to be writer, to be moderator, to be faculty in our various webinars. We have 2 webinars, Friday and Saturday. So we need 250 plus faculties. And we also need moderators to moderate the program. Plus we are planning, 2 days back, there was an arrest of CA in Gurgaon. So we wanted to do a series of 3-4 sessions, power of arrest, use and misuse, and what precaution CA should take for first himself and also the clients of the chartered accountants. So we were currently looking into, only audit, accounting, GST and direct taxes. And the Committee on Economic and Commercial Law, which is another committee where I have been asked to look into, and there are more than 500 business laws. But now we will not be looking only civil laws. We will also be looking at the criminal law from a consultancy perspective. So I would like to thank each viewer for sparing Saturday evening, and Aditya ji for taking this session. I'm told that there are no more queries. So Aditya, you can continue with the maybe 5 minutes available, or as per your desire. If you have completed, we can close the webinar.
I just have a small concluding remark to make, and thank you, sir. And I'm not sure whether you remember me, but I met you way back in maybe 2014 or so in Chennai when I was doing my certification in forensic. And that was the time when you said that as a practice, we should look at beyond the traditional practices. And that's where it kicked to me that, yes, we have been doing audit, internal audit, statutory audit. I am 1,000 miles away from taxation, so to say. So, yes, but those have been a lot of areas where we have been looking at. But there are new verticals that have come up, which poses a good opportunity, like forensic, for example, or sustainability reporting, for example, mediation, for example. And whether you are a statutory auditor or an internal auditor, I would rather say both of them have got enough opportunities now. Now, if I look at from the point of view of an internal auditor, I would have to advise the management on the requirements of the answer. I would have to put this as one of the risk factors when there are certain business decisions being taken. What is the environmental risk? What is the societal risk? What is the governance that I'm looking at it? When the reports are getting drafted, it's my duty as an internal auditor to vet that, to ensure that all of them are connected to each other. So whether you play the role as a statutory auditor, internal auditor, or as an independent professional, or you're on the other side of the table from the CFO's office, you have a lot of things on hand to do on the sustainability reporting on this topic. And the days where the annual reports were small has gone. These days, annual reports will be voluminous, will have contain lot of information that would actually give a fodder to another set of professionals who are there in analyzing these reports and coming back with their interpretations and ratings on the companies, etc. So, end of the day, I would say that it's more than a tick in a box. It allows business to relook at the way they are doing the business, change the way they are looking at for their own welfare, for the welfare of the people, and for the welfare of the society, and the nature, of course. So that's about it from my side, sir. And thank you once again for giving this opportunity. And I hope I meet your expectations.
Thank you, Aditya ji. Thank you very much. We will close the webinar.
Thank you.
Thank you so much.